I was very surprised to find out that you and Buffett still use those books to look for stocks. I mean, these days it's so easy to find information. You can just go to Guru Focus, use the stock screener, find PE1. You can do that in like half a second. Why does that still work?
Right. So actually, that's a great question because in 2006, when he invested in Daehan Flour in Korea, you could have had capital IQ. You could have run any screen you wanted. It would have popped up all kinds of companies. And if you believe that there are tens of thousands of people with lots of assets who have capital IQ subscriptions, that stock should have not been at that price. But just like the dollar bill on the ground, where the professor says it can't be a real dollar bill because in an efficient market, there wouldn't be a dollar bill on the ground. The reality is that speed of access to information is not the determining factor in leading to market efficiency. I think that markets are, because they're auction driven and because there are humans involved, they vacillate between fear and greed. And at that time in the Korean market, for whatever was going on then, there was more fear than greed. And so I find, for example, even today, there are lots of bargains in South Korea, amazing bargains. And
can you give an example?
Well, we're buying. We're buying right now, so we can't quite go there because these things trade. I mean, some of these things, I'm barely able to get $2,000 a day of the stock. And we have a $500 million, $600 million portfolio, so we're nibbling. But we're buying things at 2.5 times earnings, and I'm buying 2.5 times earnings of a business. So like for example, I'll send you on a treasure hunt. How's that?
Yes, sure,
treasure hunt is more exciting than giving you the treasure, right?
Sure.
It's always better to hunt for the treasure. So, I mean, I have an insight, and I don't know whether the insight will be right or wrong. You can tell me. So, we know that there is lots of different permutations and combinations of changes happening in the way humans travel, right? So we used to have cars and public transport and taxis. That was it, right? Now you have Uber, you have Uber Pool, you might get to autonomous, Waymo. There's a lot of different combinations. We have, some of you might be familiar with Via in New York, which I think is great. And so the end result is that humans have a lot more options available for transport and mobility, and the price is coming down. And also you have low gas prices and so on. So it is an absolute certainty in my mind that per capita miles being driven in some kind of public transport for humans is going up. I mean, I remember when I was a student, I had my bicycle and mobility was very restricted because I was poor. I didn't have a lot of places I could go. Now I just see with my kids, they can go anywhere. So if miles driven per human are going up, how can you play that? Well, one way you can play that is tire companies. Okay, so no matter what happens, I'm almost sure there'll be more tires sold 5 years from now or 10 years from now versus today. And actually, if we get to electric cars taking off, they want weight reductions. So they make those tires paper thin. How many have a Tesla here? No Tesla owners. It's a value crowd.
Value investing, yeah.
Hardcore value crowd. All right. So that the Teslas and the Leafs and all that, they have these special tires which don't last very long and they cost a lot because they want to keep the weight down. And so those are even better for the tire company. They keep wearing out very fast. So my take was that tires will do well. And so I made an investment in a company in India which was really cheap, which made one of the ingredients that goes into rubber that goes into tires, and I think that will do very well. And the other was a company in Korea, which is in one shape or another in the tire business, and it's growing. Actually, it's going to grow quite a bit. It's actually even without these demographic things happening, it'll still grow. And if I'm buying at 2.5 or 3 times. In 3 years, I have all my cash back.
So
That's the beauty of PE of 3.
So it's a tire-related company in Korea with a PE of 3. It's for the treasure hunt.
Yeah, have fun.
Yeah.
What is it you enjoyed the most about it? Because
By Charlie?
you don't pick stocks, you pick companies.
Yeah, but when I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee. I think that was the classic then. I mean, hundreds and hundreds of pages. And I read that whole thing over and over again. I read Garfield, Drew, I read everything. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way. But it didn't hurt that I had that background and everything. And I rejiggered my mind when I read the book, The Intelligent Investor. And from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business. And I did not care whether a stock went up or down the next day or the next week or the next month or the next year. And I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses. I knew something.
I've asked people about your genius, whatever we describe it.
No, I'm a bright guy who's terribly interested in what he does. So I've spent a lifetime doing it. And I've surrounded myself with people that bring out the best in me. And you don't need to be a genius in what I do. That's the good thing about it. If I went into physics or a whole lot of other subjects, I'd be an also-ran. But I am in a game that you don't need. You probably need 120 points of IQ, but 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains.
What do you need?
You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better.
And you think about?
Pardon?
And what do you think about?
I think about what the company's going to be worth 10 or 20 years from now. And I hope it goes down when I buy it because I'll buy more.
Do you have a competitive spirit? Clearly.
Yeah.
Clearly.
Well, but you got to be careful about what you compete in. It's a good thing I don't have a competitive spirit in chess or or football or anything like that. No, I'm an observer there. I enjoy watching things like that, but I try to keep my competitive spirit in a game where I can win.
Do you have a killer instinct?
Nah, not exactly. I've got, I wouldn't call it a killer instinct, but I do know this. When I want to do something, I always want to do it big.
What does that mean?
I put my whole net worth in City Service Preferred,
$120.
$114.75. And I put my whole net worth in, and I've never, since that day, and March 11th, 1942, I have never had less than 80% of my money in American business. You can call them stocks.
Or equities.
But I see them as American business. I've owned a piece of American business for at least 80% at all times. I don't want to own anything else. I want to own a home and things my family wants and all that. But owning 5 homes doesn't mean anything to me because I'm going to be happy in one home, and there's a certain amount of things that go wrong with everything. And if I got 2 homes, I know I've got more problems and I don't have more happiness.